Good morning, everyone. Welcome to Tuesday the 3rd. Aloha, Cisco. How you doing? Hey, Juan, ¿qué pasa? Hey, JB, long time no see. How you guys doing? What's up, Ian? Jerry? Oh, man. Well, here we are again at all-time highs. uh, what's up, Stelz? How you doing? Yeah, it's kind of interesting how we got all wrapped around and turned about, and here we are all over again. Hey, Marcus, how are you? Alrighty, well, what have we got going on here? Overnight inventory's a little long, right? Pretty simple the way we look at things. Inventory is just time and volume traded, and market profile people, they say if inventory, time and volume are traded above the previous day's close, inventory is long. That means you're looking for a move down to correct it. If inventory is short, you look for a move up to correct it. What's up, AO? How you doing? So, I want to bring your attention to some larger zones here. Okay. Um, Within this 67.88 to 70.30, the big red lines here, this is a big zone that we have. Within that, we've got some smaller ones, and that 68.24 worked pretty well a couple of days ago when we bottomed out right here. So the natural thing to do is to rotate up to 70.22, and our high today is 70.24. The other big level that you're watching is 70.30. Last time we looked above and failed and came back down, and then we failed to look below here, so we rotated back up. Now, if you're short, that's fine. Your risk really is going to be here. So for larger traders, right, you're looking for the best trade would be a look above and fail of 70.30 like we got last time, then you could initiate short. But if we look above 70.30 today and accept, be careful because there is no cost basis for anybody to sell into this, right? And swing traders will stay in a trade as long as it's working in their direction. There's no reason for them to sell, okay? So be aware of that. Let's see when London opens. London will be the first clue, right? The first clue is London opening. That's why I do this session, to see if we get any kind of movement lower, okay? Today, unfortunately, I got to run to the cardiologist this morning, so the session, I'll be with you guys. We'll watch the London Open, and then I got to run. So it'll be about 45 minutes this session. It'll be a quick one. It's kind of slow anyway. Right? We're in distribution right now, so people who are just joining us, what we're doing is we are distributing the inventory here, up here, and the difference, my friends, is profit. Okay? So that's how markets work. You take inventory and you go sell it. we are in a situation where right now we're at a place where there's really no cost basis. The old all-time high is what? What was the old all-time high? 70.31. Okay? So we have basically two sets of stops. There's that 70.30 level. We looked above that and came back in, and we're dangerously close to that again. And I think, yesterday, yesterday we had, and the day before, we had so many people short the holy living crap out of this thing. And unfortunately, the more people short this market, the worse it gets. It gets really, really bad when everybody shorts it because then everybody has to buy it back. The more people short a market, the more buyers you've created. A lot of people don't realize that because they know nothing about market mechanics. And it's one of those things that really, really gets people into a lot of trouble because they just don't understand the simple mechanics. A short seller is a future buyer, right? A short seller is a future buyer, which means if enough people short a market where everybody's buying it, that creates a problem for the shorts. It means they're shorting in an area where the people who, let's put it to you this way, they're selling something they don't own in an area where the people who own it are not selling it. They're buying it. That can be a problem. And it sounds very simple, but it is, right? Markets are not complex, right? They've made them complex to keep you guys poor, right? Right? The more they frustrate you and make you guys think that this is a big, serious math puzzle, the more you guys will waste your time trying to figure it out and you'll never make any money. So what we need to do is learn how to trade with the flow of business. Right? So right now, you could see that we put the market on sale under 70.21. VWAP is here at 70.17. So there were buy orders between VWAP and the bottom of those candles. As soon as the sellers saw those buyers, they lifted price. Right? So that's why we watch the offer. Right? Because if you're a seller and nobody's buying your product, you have to lower the price that you're offering your product at to get rid of it. Right? When you have buyers, you don't have to do that. So that's why if you're a short seller or even if you're long, you always want to let the size traders show you where they're setting price. And that's the offer. So that 24 area, there's a seller here. You can see that there's a seller at 24. They've been there a couple of times, right? It poked its head above 24 for what, 10 seconds? Right? And left a high with two tiny ticks of excess. So you can clearly see that there's a seller. And once you understand that there's a seller there, then if you're long, that's where you get out, right? See, seller, seller. They front ran it there. They front ran it there. Seller's there again. Seller's there again, right? So once you identify where the seller is, then you can intelligently take trades. So if you were long at 19.20 and it gets up to 23, 24, if you know there's a seller at 24, get off the train here, right? Before they come and knock price down. Make sense? Right? Pretty simple. And now we just sit here and watch the paint dry for another 17 minutes. How's everybody doing? This was the surprise of the day yesterday. Apple up almost 11 bucks, 10 and a half dollars. I was expecting resistance at 266 and we just cut right through it. Amazing. So we're right back into this cost basis above 266 on Apple. Microsoft not so well, right? But pretty much everything found a bid yesterday. Much to the despair of all the short sellers, who keep saying that we are going to blow up and everything. Just doesn't, the charts just aren't backing it up, Even gold and silver caught a bid. Let's go look at the futures this morning on gold and silver. Silver 86.81, gold 4947. So everything caught a bid, right? What is that? That's a bad print in SPY. That'll get cleaned up. NASDAQ cleaned up. Everything caught a bid, my friends. Everything. So, yeah. We did a look below and fail of 68.90 all the way back to 724. Just crazy. Now let's see. We're at 724 again. The overnight point of control has moved up from 70.18 up to 70.22 3/4, right? The point of control was here because everyone was short covering above yesterday's high. Well, Jerry, remember those videos that I got you to watch on why the market does what it does? And I specifically use Apple as an example, right? Apple has 15 billion shares in the float and less than 100 million trade. So you can push that stock around pretty easily, right? Which means any kind of liquidation is quickly bought up. Right? So, yeah, they had earnings, but it was last week. Right? And the stock sold off. That's the problem with these markets. Right? Yeah, everybody seems bearish. That's why you can't, and I don't mean this in a bad way, but you really can't look to Twitter or CNBC or these places for financial advice. Because everyone out there, it sounds really bad when I say it, but I have to say it. All those people are talking out of their ass. Right? Have you ever heard on CNBC, oh, be careful, the inventory in this stock is long and it's got to clean up? Have you ever heard that? No. Have you ever heard, oh, inventory is short, this thing's got a tiny float, be careful shorting it? They don't tell you that. They go through some BS. They talk the fund managers talk their portfolios and blah, blah, blah. And it's just like, the chart is the only thing that doesn't lie. Right? Stock promoters lie, fund managers lie, people on CNBC. Do you guys know back when I started, if you wanted to get a company profiled on CNBC, you'd go to a place and you'd meet a certain individual who's not on CNBC anymore, but you'd slip them 50 grand in an envelope and they'd feature your stock on CNBC in the morning call. All that stuff is just, don't trust that stuff. Right? I've been at those dinners. I've seen the envelope get passed. Right? So I'm not talking out of my ass. Right? Stop watching the news. The chart is the only thing that will tell you the truth. That's why you look at some of these companies and they're like, oh, it's such a great stock. blah, blah, blah. And the stock keeps going lower. And people are like, no, we just keep buying more. And yeah, but like the stock keeps going lower. There's a reason why the stock keeps going lower. Somebody's selling it, right? And if somebody's selling it at the lowest possible prices, it means that they have a low cost basis, right? It's not short sellers pushing a stock down. It's somebody who owns the stock at $5 who's selling it at 20 who keeps pushing it down, and he'll sell it all the way to 5. And everybody thinks, oh, it's a great deal. It's a great company. It's happened on so many of these companies, right? Where the CEOs issue themselves billions of shares of free stock, literally billions, right? The only one that it's worked out on is Palantir. But those guys, they polluted the crap out of that deal. They sold it down almost to $6. And thank God they revived it, because there were so many of my friends that were caught long in that pig. But that doesn't happen often. You know, a lot of them just disappear with your money. Right? So always trust the chart, whether you're trading or whether you're investing. Right? Yeah, I still remember being at the Waldorf, and this old promoter who took us to New York, he's like, watch this, kid. When this guy comes in, you don't say anything, we're going to slip him an envelope. 3 days later, the stock's going to be on CNBC, so make sure you get up early in Vancouver because you're going to be selling. Right? Sure enough, the guy mentions the stock on CNBC, and I'm just dumping it into the market. Dump, 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 dump. Right? The biggest market maker at the time was Knight Securities, and they were like, JJ, can I show you a... And before they would say bid, I would go, sold. You didn't ask how much I want to buy. Doesn't matter. How much do you want to buy? 50,000. Sold. Right? Just sold, 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 sold. Right? My clients must have sold what? 800 grand worth of stock in a day? Not bad for a $50,000 investment, right? They got liquid. We're just pausing right here. There's a stop from that B high from the 28th. And that's where they're selling into it. You see? You see how we came right to that area and they sold into it. If you don't have market profile, you can use a half-hour candle chart. Hey, Martin, how are you? So yeah, you got to really watch out what you pay attention to on the news. That's why I'll never look at anybody else's analysis. It's the worst thing to do is read other people's analysis because it'll influence you. Right? You got to learn for yourself. And if you keep it simple and it becomes a routine, then you can, you can get along quite nicely, right? It's all routine. You do the same thing every day. So every day I come in, we do these balance levels. Should I be buying up here at 4 times cost basis, or maybe I should just maybe I should let it clean itself out a little bit. It was the coin of bitterness. I think Bitcoin's got to clear 79,371. And once it does that, the cost basis will be underneath us. So we'll see how long that takes. It was a hell of a liquidation. I bought a little bit at 78, 79. I think it was 79 on the way down, and then my last buy was 76, just a little bit when we did a look below and fail of 75,734. And I'd buy a little bit more if it got down to 70, under 70,000. That would be a look below and fail of 70K would work. Hey, Blackhawk, how you doing? Yeah, routine. The thing about routine, Martin, is once you start doing it, it's hard. But after a couple of weeks, it just becomes normal. It's the only thing that helped me in retail because I was completely undisciplined when I started doing this. Um, so I had to, and it took me a while to figure out, oh, geez, I need to do the same thing every day because if you're looking at different things all the time, there's no consistency in what you're looking for. So if you're always changing things and going from one indicator to another or blah blah blah, you're you can't have a reliable way of doing business if you're always jumping around. So you really, really, really have to focus. Do the same thing every day. Find something that works. And I'll tell you, inventory and cost basis work like a charm because it's a market, right? So, and it's kind of nice to be free of the news, right? News is bloody depressing, you know. Okay. Oh, this is very hard to trade. If anybody's wondering why I'm not trading, it's because I don't trade candles that look like that. There's no edge here, right? There's absolutely no edge. When you see candles that are like tiny like this, just stay away from it, right? Just stay away from this kind of thing because what you have to do is you have to build positions. So if I was going to go long here and I saw this, I'd be building a 70-20 position using this as my out and then selling from 20 to 24. But that doesn't happen very often, and you can be very, very wrong when the price action is slow. So just be careful of that and let the market sort of build out some order flow. Sometimes we've got to wait for people to come in. Today we've got 10 o'clock, what is there, job openings, 9:45 S&P final U.S. services PMI. So we got news after the opening bell today. Thursday jobless claims. Does it matter what happens inside a candle? No. What matters is the top and the bottom. It's a good question, Info Fuel. Right? I use a 1 minute candle for my day trading balance zones. Okay? So I have balance zones that I do every day, and then I have balance zones that I have for longer term references. Right? So some of these balance zones, like this 72.70 down to 70.30, that balance zone, and you'll forgive me, that one was derived from here. After COVID, my original balance zone was 27.49 to 28.10. And I've been doubling it now for 6 years, and it's pretty damn accurate. You'll see the look below and fail of 70.30 last week. Pretty much to the tick. 4 ticks. So those zones work. And you'll be wondering, Jesus, JJ, how does that work? Why does it work? Because we have contract rollover and everything, right? Um, because it's all the same inventory. We could go trade GC. Yeah, I don't jump around from market to market. I've never traded I've never traded anything other than ES. I remember once one of my friends got into trouble in NQ, and I helped her trade out of it. Jesus, that was, oh God, I was up till 3 in the morning, 4 in the morning, helping her trade out of this NQ short. She didn't know what she had no clue what she was doing, and it was so stressful. I slept for like the entire day. So after that, I don't need that kind of stress. There's easier ways to make money. I don't trade markets I don't know. So if I were to go trade GC, right, I'd go and look at it, and I'd have to know it like the back of my hand before I risked a dollar. You know, most retail traders kind of pretend they've got a money tree in their backyard and they have unlimited wealth so they can keep blowing up accounts and losing money. I unfortunately don't have a money tree in my backyard. She was down about 40 grand. She had a fairly substantial account, and it would have been wiped out if I hadn't intervened. And yeah, that was the last time I did that. I used to do that all the time for market makers and stuff. I'd help them trade out of positions or yeah, I don't want to use a 30-point stop loss. Oh God. How did you trade out of it? Skill. Skill. Skill and a lack of sleep. That's what we do, right? I mean, you guys, okay, London's opening. Good, we got a sell order. Now, if London opens, let's see if we can take out 70.19. That's what we're looking for, right? That's where the bid was last time. So watch as it kind of moves down. London's doing what it usually does. It opens and then it tries to get some cheap inventory. Hey, Moran. Yeah, it's hard doing that. When you have a smaller account, you can't trade out of it. You need capital to trade out of something. There's 70.19. Didn't I tell you? Look for bids. If we have a size seller, we'll break 19 and come down to yesterday's high, you see? The reason there are buyers here is the people are short underneath yesterday's high and they are front running it, which means they're buying ahead of it. That's why we came down to this place, stopped where those bids are, and the sellers are now increasing price. Yeah, of course, order flow and footprint charts do more harm than good because you don't know how to read them. And you don't understand how order flow works. That's why I really caution people against using, right? Look, I mean, how much more simple do you guys need it? Look, there were buyers here before, there were buyers there again. So the sellers stopped selling. I mean, really? Do you need a footprint chart to see that? I mean, it's so simple. Just watch the offer, right? That's why all those footprint chart traders, very few of them make money. They love to talk a big game and they use lots of fancy language so they can sound smart, but they don't make any money. The more complicated you make this, the more charts you have to look at to make a decision, the worse your decision making is going to be. Right? Watch the red line on this candle chart. If the red line starts moving up, it means the sellers have seen buyers. If the red line starts moving down, it means the sellers are competing and lowering price to get rid of their inventory. Just like a store. Just like oh my God, a market. Right? It's a market, my friends, right? So markets set price according to the buyers. If there's no buyers, you can put it on sale. You don't need a footprint or a nose print or any sort of thing, right? Order flow charts are the biggest scam out there. Order flow is happening right now. Everyone is an order flow trader. Buy orders flow in, sell orders flow in. They transact, and it's shown on the chart. Order flow software is a chart. Specialized order flow software is a scam. It's a scam. It's a marketing scam to take your money. Just like in the 80s, right? The catchword was turbo, right? They had turbocharged cars, so they had turbo t-shirts, turbo cologne, turbo watch. Everything had turbo on it. It was marketing. Now it's all order flow, order flow, order flow, order flow. So I think, Cisco, you and I should put out the order flow cologne, right? For traders. Not a bad idea. Right? Order flow cologne for the serious trader. Oh my God. And people fall for it. People fall for it because they don't know any better, right? So some guy comes along with a slick video, right? And everybody falls for the snake oil. See, look. There's the bid. The bid's at 19, right? And we're right back up to 23 and change. There should be a seller somewhere here, maybe 23 and 3/4, 24. And we're in distribution, right? The overnight point of control is there. So we still have buy orders that are right by the previous day high because everyone's trapped short underneath it. Pretty simple, right? If you want to simplify your trading, right? If you want to simplify your life and actually make some money doing this, come join us at the Trading Syndicate. Steve's having a sale right now, and it's $29 for a month, right? And you get the AI for free, right? Give it a shot. You know, there's no obligation. Come in for a month, see if you like it, ask questions. I promise you'll learn more with us than you will anywhere else. Practical information. See, I told you there'd be a seller. Didn't I say there's going to be a seller somewhere here? Well, yeah, because they've been there before. Look, there. It's not rocket science, my friends. It's not rocket science. If you can pay attention, we can teach you. All you got to do is pay attention. Now we're going to come back down. Let's test this 19 level again and see if we can hit it. Yeah, I got to run out to an appointment, so I'm not trading until I get back, David. The best trade would have been a look below and fail of 18, but had I been really quick and I had my trading software open, I would have bought 20, I would have put my stop here, and I knew that there's going to be sellers up here at 22, 23. I'd be out by 22, 23. That's how I trade. Right? So I would wait to see a bid here that matches that bid. When the market gets over this 21 level, I know that they don't need to sell underneath it. So you go long 21, 21 and a half, 22, right? It's not the greatest trade because you know there's going to be a seller at 23 and change, right? So that's a quick scalp, right? If you're really on the ball, you can try and buy the bottom of the candle and put your stop at the bottom of that candle, right? But the trade for beginners is the look below and fail of an edge. These are kind of harder trades to take. Right? So now we're coming back down to that level. Would I take that trade now? No, because we've got more inventory above it. I'm looking for a break of that, and a nice trade would be a look below and fail of the previous day high. That would work. Right? Get down to 17, come back up over 18, go long. You got a place to put your stop. Right? Let's see if the bid moves up from here. Does that make sense? If you watch this over and over again, and if you watch the offer, when the offer is moving up, it means the sellers have seen buyers, like they are now. See? See how the red line is moving higher? It means the sellers have seen buyers and they're raising price. Right? There are sellers in this market. Right? There are sellers of size. They're called wholesalers. And they buy thousands of contracts and sell them for not much money. But do the math. If you push 1,000 contracts through a $12.50 spread, that's 12 and a half grand. That's not bad money. See, we found the bid just a little higher. So the buyers who were here moved their buy orders up to here. And you can see that because of actual transactions, not some stupid order book. Right? These are actual transacted volume. Right? So that is real. That is not fake. So you can see the bid was here, here, and it moved up. Now the bid has moved up to here. Why does the bid move up? Because it's following price higher. Buyers are not in control when price is going higher. Buyers are being forced to pay more. Right? That's another one of those trading things that is the stupidest thing I've ever heard. Oh yeah, the market's going up. Buyers are in control. Since when have you ever wanted to pay more for something? Hello. Oh yeah, it's $50. Oh, can I buy it for 75? I want to be in control. That is the dumbest thing I've ever heard. Right? So when you hear stuff like that, folks, use a little bit of common sense. We have a poor high there, right? Use some frickin' common sense. Buyers are in control when price is going up. Think about it, right? The other one, buyers and sellers are fighting each other. Really? So if you go into Walmart to buy a TV, does the sales associate attack you with a hockey stick? Right? I go to buy a hamburger at Burger King. Does the guy jump over the counter and punch me in the face? What kind of stupidity is that? Buyers and sellers are fighting each other. Folks, use your common sense. For the love of God, you're going to need it this year. Yes, I'd like to buy a car. Oh, we're going to have to go fight outside. Come on. We're running that stop. We're very close to the all-time high. I got to run. I hope I've entertained you. Come to the Trading Syndicate. We'll teach you how to trade with some intelligence and common sense. And we won't kill you financially to do it. I'll be back at 9 o'clock a.m. Thanks, everyone, for joining us. I appreciate you guys. But I got to go see the old cardiologist. Function of getting old. Thanks, guys. Bye for now. Appreciate you. Stay out of trouble.